Welcome to Silicon Valley Unplugged. I'm John Huang. We're living through the fastest technological acceleration in human history. AI is no longer a concept on paper. It is now part of our infrastructures. The companies that Panelists come from are all working on technologies of today. They are the ones shaping the physical backbone of AI, semiconductors, and industrial infrastructures. Meanwhile, their venture arms are investing in technologies of tomorrow. They don't just invest, they're able to invest with a deep understanding of breakthroughs today, giving them a clear view of what's coming up next. That's why this conversation matters. Tonight, we're gonna unlock the perspectives of corporate VCs to get a glimpse into the future. To get started, we're going to invite panelists to our stage. The first panelist is Anand Kaman-Navar, the global head and VP of Applied Venture, the venture arm of Applied Material, the company that's in the heart of semiconductor industry. Applied Material is responsible for manufacturing infrastructures for advanced chips. Let's welcome Anand Kaman-Navar. Our next panelist is Divya Raghavan. Divya is a principal at Hitachi Venture, the venture arm of Hitachi, the company that operates at massive industrial scale. Hitachi builds critical infrastructures from power grid to transportation systems to large data platforms. Let's welcome Divya Raghavan. Our last panelist is Ben Haskell. Ben is a principal at Land Capital, the venture arm of Land Research, one of the major supplier of fab equipment and a major player in the semiconductor manufacturing ecosystem. Let's welcome Ben Haskell. All right, thank you for joining us, especially at this phase of the time when AI is being deployed and even crossing over to the physical space. And before we get started, I think some of the audience may not know the difference between a conventional VC and a corporate VC. Conventional VC may care only about the return of their capital investment, but corporate VC, CVC, may care and consider whether there's an alignment with the corporate objectives. So I want to get some experience from you that if you have seen any technologies out there that possibly may align with the corporate mission, but at the end of the day, think that this is not going to produce any kind of revenue down the road. Have you had any kind of experience of that? Now, would you start with that?
Thank you for having us here. Look forward to the great discussion today. I think the question is, how do we decide between strategic and financial returns? The answer is fairly clear, right? The company has to deliver on both strategic and financial outcomes. There are many instances where it is financially not a viable company, but strategically relevant. So we have many tools in our arsenal, like licensing, NREs, or other mechanisms that we use. What we want to focus on is our outcome, right? I always say, bad CVCs focus around opportunities, good CVCs focus around desired outcomes. And equity is a very expensive way to use as a tool for a company that is not financially reliable.
What about you, Diva?
Yeah, so we are a different flavor of CVC, which is we are a single LP fund. So the way we are structured, unlike LAM as well as Applied Research here, is we have a corporate LP, but we operate as a financially driven venture firm. So what does that mean from an investment standpoint, especially from a strategic fit? So the way we think about investments is we are financial first, but not financial only. So thinking about strategic angle is something which is ingrained in our investment process. And to your question, if there is a situation which is not financially attractive, but could be strategically relevant. Just like Anand mentioned here, we do have our tools at our arsenal. So in this case, like we would actually refrain from investing because our first mandate is to produce financial returns. But we do make sure that they have access to the right business unit because we are also serving as the eyes and ears of our corporate in the startup ecosystem.
That's right. How about you, Ben? I mean, we want to hear some juicy details from the boardroom when you're going to bring in technologies that could take over some of the corporate side. Does that ever happen on the land research?
Sure. So it's a great question. I think there's a range of companies that are perhaps not attractive to financial VCs because they can't provide the 10x kind of returns that a financial VC might look for, but are still interesting as potential suppliers to industry like the semiconductor industry. So the short answer is yes, we will still look at those companies and consider investing in them. If they really don't have revenue prospects, that probably means they don't have the opportunity to sell to Lam, and that's going to dent the strategic rationale for investing in the company. So where we're looking for companies that can impact our future products and services, potentially as a supplier, potentially as some other kind of partner. If they really don't have prospects, then we're not going to invest. But we do try to help them refine their business models in some cases and diversify their customer base and help them operate a little bit more like a venture-backed company than they might have started out when they first approached us. But we don't have the same strict financial return metrics that many other VCs have. But we also don't want to make bad financial decisions. So we're looking for good business models.
Certainly. So, one of the questions is from the startups is when they come in and then maybe you invest in them, do you, like in early on, do you start to have a lot of restrictions on them or you let them operate the way they want? Because a lot of conventional VC, they dump the money and they kind of leave. Corporate VC may have another agenda behind that. Does that happen with Land Capital?
Well, we try to be a good partner to our portfolio companies. We tend to do relatively clean investments without a lot of restrictions. That said, we believe very strongly in good governance practices. So it's common for us to become board advisors or take board seats in larger investments. And we want to try to help founders to build strong teams around them. And one of the key teams that a CEO relies on is their board of directors. So we strongly encourage our portfolio companies to build out a board with independent directors and a diverse range of opinions that can help them grow their companies more effectively. But we don't necessarily require that as part of our investment. We view it as more of a partnership and trying to provide guidance that can help these companies succeed.
Well, how about Hitachi? Hitachi is incredible management-wise. I mean, do you like shock and get the startup to do exactly what you want? Does that happen?
So again, we are structured as a completely separate entity, and that's where that really helps. There's a Chinese wall with the corporate, so we don't have, and also what matters here is the stage at which we invest. So we do a lot of seed through Series B. So at that stage, the whole idea of our term sheet is to keep it as founder friendly and as company friendly as possible. So having any sort of right of first refusal or these sort of mandates which can block future acquisitions will not be looked upon well for future investors, right? So we try to keep it as clean as possible.
Well, and I want to hear you say we choke them to death and tell them to exactly do what we want. Does that happen to apply?
If corporates or corporate venture capital need control, then they shouldn't be in the venture capital business.
Exactly. So, given that Ben mentioned about people on the team, Ned, so what matters though? A brilliant scientist or perhaps a world-class operator? What do you prefer though? What kind of CEO do you want to see in your portfolio?
I think scientists create possibilities, whereas world-class operators convert that possibility into a reality. And both are required. It's like a duet. So in a certain sense, you do at an early stage need a little bit more scientists or engineering-friendly teams, whereas once you start scaling, we are looking for more operator-driven companies, because at that stage, you're not just building one single product or some prototypes, right? We are looking for companies that can scale their prototypes and bring it to real life.
How about
Yeah,
that?
I would say it depends on the stage. At the earliest stage, you want a brilliant scientist to be able to create that, technology and get it off the ground. But also, what we want to make sure at investing at the early stage is to make sure that the CEO or the founder has that self awareness about what is the scale up to which that they can take this company, right? And having that self awareness is pretty important. And of course, as the company scales, you do want to have a seasoned operator kind of step in there. So a benchmark or a question that I ask myself while investing in an early team is, can this current team in its shape and form take it from 0 to 25 million in terms of revenue or ARR or whatever? So 25 million is a decent scale where you can start bringing a seasoned operator and start making changes. But because making any change to a management team that early is a huge risk. So
Could kill the product itself.
exactly.
That would be a problem.
Yeah, I think it depends on the type of company and their intended products. But in general, I think that technologists would be well served to recognize that companies often don't fail because of their technology. They fail because of markets or team or uh, the business side of things that they maybe didn't have experience in. So it's incredibly valuable for a technology focused founder to try to bring in experience from operators and fill in the gaps in their own knowledge base. But the short answer is, if I had to pick one, I would pick the operator more often than not, just because it takes a lot more than just technology to make a successful product in business.
It's all about execution, right? Execution is at the end. There's a lot of similar ideas, and ultimately at the end, you got to be able to execute. But definitely,
The startup is full of graveyard of possibilities and prototypes that are never scaled.
that's true. That's very, very true. So, we have few founders in the audience today, and CVC maybe will be different than conventional VCs. Where have you seen some startup founders, they underestimate themselves how hard it is to sell into your ecosystems? And what are some crazy people that you've heard that doesn't even gonna make it? What are some stories out there? And then maybe you want to start. I see you probably met a lot of founders out there.
I, First of all, I think we have a lot of empathy for founders who are trying day in, day out to make or convert their vision into reality, right? So I think we have to understand that there will be failures as process, right? One of the biggest challenges we have seen is, like, a lot of times people assumes demos are going to result into revenues, but only a subset of that actually go into high volume. And one of the challenges within the deep tech sector, unlike purely software as a solutions, is there is a certain amount of scaling, reliability, ROI analysis that goes into delivering that to get to high volume scale, and that's where there's usually a lot of things don't scale very well, right? And that's where we see a lot of times or challenge where the prototypes or the POCs don't convert into large scale customer revenues. So we see that as the biggest gap.
How about you, Diva?
Yeah, I think everything what Anand said in terms of it is extremely hard as a founder to kind of get the things going. And one of the pitfalls that I've seen, especially with early stage founders trying to crack corporate or a conglomerate like Hitachi, is just the underestimation of the time and effort that's required to crack it, right? So our pitch to founders is not, we don't require any business unit sponsorship to get us to invest, but think of us as your friendly VC who happens to have a very special connection with Hitachi. So once we invest, we will work extremely hard to make that connection happen and have Hitachi join you as either a customer or a corporate, joint go-to-market partner here. So.
Yeah, agreed with both your sentiments. The semiconductor industry is very difficult to get traction in. The reliability requirements are through the roof. What our customers, the fabs, can accomplish at high volume is absolutely astonishing, and they don't get there without extremely trusted partners. And that's why our companies are suppliers to these companies, and that there aren't a lot of new players popping up in our space. It takes a long time to build that trust. So we view ourselves as being similar to what Divya said, a conduit to bring new ideas, new technologies into this industry, and to try to bridge to our customers and to our own teams to bring that innovation in a more accessible manner than trying to come in from scratch.
Thank you, Ben. So just to wrap up this segment about VC versus CVC, just a quick one. If they work with your company, should they expect speed coming from a large corporation support, or they're gonna bunch of bureaucracies gonna land on their head? What usually is the case for Lam?
Well, it depends on how big of a problem the startup company can solve for us. If it's a big enough problem, there's plenty of speed behind it. If it's maybe a nice to have, it probably is going to take longer to find stakeholders that want to engage. But when the motivation's there, things can move pretty quickly.
I want to hear this from Hitachi. This is bureaucracy from the Japanese, I hope.
No, I think firstly, Hitachi has a huge, and Japan in general is a huge market for enterprise software. So that's certainly appreciated by the startups that we invest and try to take them to Japan. So what I was going to add on is there are only certain segments within, at least I focus on a lot of software and digital infrastructure investments. There are only certain segments where I've found corporates to be extremely forward-looking, and that segment typically tends to be cybersecurity. But the rest of the areas, they're usually playing catch-up. So usually the companies that we are investing in are 2 to 3 years ahead in terms of timeline. So to your question about speed, it greatly depends, but sometimes it takes a few tries for companies like business units within Hitachi to start seeing the problem and appreciating it, and then starting to engage meaningfully with the startup. But that said, I was hoping one of the panelists would bring is corporates typically have this "we can build it" mindset. So that's the effort that we're usually fighting internally and trying to convince them that why are you trying to build this internally? Why not partner with a startup? Why not consume an external solution? So it's more of a mindset shift that is that's the biggest challenge.
Right, and then it's speed moving so fast. I mean, people can scale really quickly. Is the big corporation too slow to adapt, or are you able to bring startups to come in and really rejuvenate the whole process?
We have been doing the partnership with startups for over 2 decades. What I find is the POCs, etc., are much faster. But as you can imagine, at scaling, things are much more deliberate. There's a lot more checkpoints because failure is not an option when you're delivering these tools and solutions to a customer. So there's significant amount of risk management that happens at the scaling side. To be honest, we need to get better at both of them, right? Both at the POCs, we are fast, but we need to get faster. Even on the scaling, we are deliberate, but we need to get faster on that side. So those are definitely opportunities from a corporate side.
Very cool. So let's move on to the fun stuff. Let's talk about technology. That's what makes us happy.
Thank you.
Yes, we're gonna go to technology now. So if you get to invest only one layer of AI stack, is it gonna be on material, equipment, infrastructure, or it's gonna be on software? I want to hear that.
I believe the atoms are the ultimate mode. So if I had to pick one, materials engineering is where we see the biggest opportunity in terms of scale.
Because you apply material, right? So
that's there, and maybe there's some bias towards it as well. But one of the things we see with the whole AI scale-up is a lot of the issues or bottlenecks that we see, whether it's around power delivery, interconnects, not just within the chips, but also across fabs, etc., is coming down to materials and physics, right? And that's where we see the biggest bottlenecks happening, and that's what we are investing to solve from our end.
How about Hitachi?
If you'd asked me this question 1 year back, my answer would have been different, which is more on the software side. But things have changed so
It's changing
dramatically,
fast,
and
right?
as a VC, I have to adapt. So I'm going to pick infrastructure, and I pick infrastructure because it's truly horizontal. And we are only scratched. There's an entire build out that's happening of the whole AI infrastructure stack. So it's a pretty huge market opportunity, and I'm one of the things with infrastructure investing is there's always like a wave one that comes out, and then there's a wave two which sticks, right? So I think right now what we are seeing is a wave one. So I'm going to lose some money as if I invest in the wave one. I would rather wait for the wave two. But at the same time, investing is a tricky. You can't sit out the market, so I'll have to find pockets where not to lose money.
This is getting too predictable because we got Applied here in material, Hitachi in infrastructure, equipment, right?
Well, as a materials engineer, I'm going to say infrastructure. I'd love to.
You and I might have different definitions of infrastructure, but anyway.
Perhaps, but no, I think that the way that data centers are constructed today is going to have to change. That there's a lot of attention being paid to interconnects right now. Copper is reaching the end of its life, although that has been said for some time now. The transition to optical communication in AI data centers is likely coming, but it's still a wide open ballgame. So we've made a bet in that space. We may make others, but I think there are some interesting evolutions that are going to happen in the way that servers are constructed in order to make AI more efficient over the next couple of years. On the software side, I have no idea if the algorithms we have today are going to be the ones we care about in 5 years. I think they're likely not. So I wouldn't want to try to make those bets. It's well beyond my expertise.
Interesting. This is coming out to be an interesting conversation, although a little bit unfair to the software people, but I'm still going to ask, if you get to bet, would you bet on software or would you bet on hardware today? From you, probably hardware, right?
Oh, that's what we invest in mostly, so I certainly would.
It would be software.
Software,
Yeah,
huh?
just because of the nature of our investment. Because hardware, you require a special level of expertise to be able to appreciate hardware investments. It's just not how we are designed at this point.
I see. How about material?
I think it's a kind of depends, right? Because software, I think even on the software, I agree with Ben that a lot of software algorithms and modalities are changing with Claude and codecs, etc. But ultimately, you have to look at where the moat is, right? Even with software, you can have a moat. Some of that moat could be hardware, right? Because they're tied to both the hardware and software. Because NVIDIA is not NVIDIA just because of its hardware, right? It's in the GPU plus the CUDA stack. Even on the software, we look at is where is the moat or the differentiation coming from? It's no longer from algorithms or just brilliant scientists, right? There's a network effect, or you're part of embedded layer that is very hard to displace, etc. Right? So even within software, we are definitely looking for where the differentiation is, and we have made quite a few bets recently, and will continue to do so.
So I've met a few people nowadays on physical AI space, and they're talking about there are issues on whether that system should be kept open or should be proprietary, and it really depends on the companies behind that. What is your view on looking forward? Do you think the world's going to be a proprietary system, or is going to be very much open so that a lot of ecosystems can supply that?
My view is it should be open at the seams and proprietary at the core, so that people can build a differentiated product and get economic value of it. But in general, shouldn't be that closed loop that the entire industry is stalled, right? So that's where we see pockets of innovation that are able to collaborate with each other. That is driving the force. So as I said, open at the seams, proprietary at the core is not a bad place to be.
I would say the hardest problem when it comes to physical AI implementations is the data problem. So there isn't enough data sets available to train your system. So my perspective on this is open data. So there are lots of interesting, communities that have popped up to make data gathering as open as possible. But at the same time, there is some amount of proprietary nature that's associated if you're building out these systems, they have to be proprietary because some of these will have applications, especially in the mission critical use cases or so. So they have to be closed by nature.
What's your view on this, Ben?
I tend to think that many customers for robotics are going to expect proprietary models to protect their own IP, and a lot of it comes down to data. There are obviously many environments where robots will operate in the future that are open and public, but within companies' closed environments, there's enormous IP that could be captured in an open system that could essentially leak trade secrets. So I think many companies are going to expect those models to be at least fine-tuned in a proprietary and closed manner, so that they can ensure that they are protecting that IP that went into training the model, and they can derive a competitive advantage from it.
So let's move on to another space. As you look forward, and I'm sure you talk to a lot of companies and a lot of infrastructures too, both ends. Are you seeing that the future bottleneck for AI is going to be on energy limitations, or it's going to be on computational power limitations? Which bottleneck are we going to hit first, and how far away is that?
Well, they're certainly related, but I think energy is probably the nearer term problem. Chips are limited by how much heat they throw off today, and that's the energy that's going into the system. So the opportunity to reduce energy consumption through advanced low power interconnects is going to be a major change we'll see in the next couple of years. But I basically believe that the chips are going to have to become more efficient themselves once the interconnect problem is solved. Right now, they're perhaps not the limiting factor, but it's hard to see AI's application space expanding massively with the current energy profile. But at the same time, I think there were fears 10 years ago about how data centers were going to consume enormous percentages of the world's power by now, and there was innovation that kept it at bay. But now we're starting an even bigger super cycle, so something's going to have to change from an innovation standpoint.
Sounds like a good space to go into energy efficiency. How about Hitachi? Is it computing or is it energy?
I would agree with energy. It's more of a near-term problem. And interesting, I think Ben covered it well in terms of what's happening in the energy sector in the short term. But interestingly, a moonshot concept that I've bet 2 or 3 companies actually in the last couple of weeks is space data centers. So these huge, there's fundamental limitations in terms of cooling on Earth, and the whole idea is to kind of move it, have payloads that are sent to space, and then build infrastructure that is that all the interconnects, all the chips, etc., running in space, and then there has to be a connectivity with Earth. So these are moonshot ideas at this point, requiring billions of dollars of investments. But I don't know. I honestly, having met 3 companies in this space, I still don't have a perspective of whether this is, going to be a reality or not.
I think on the energy side, right, people are working. I'm fairly bullish that we'll find an answer to it. People are working all the way from the transistors to the packaging to the chips to systems to hardware to solve the energy problem. In my opinion, I don't think it is access to the AI or the algorithms or the data power that's an issue. The biggest bottleneck today is trust, right? How do you bring in trust into the ecosystem so that you can enable scaling of AI? Because the rest are engineering problems. Trust is not an engineering problem, but needs to be solved.
So about energy, we'll go to Ben about this one. I think Jensen Huang said Taiwan's going to run out of power. TSMC is going to consume all the power in 5 years. That sounds very scary. So on the geopolitical stuff on this, do you see Taiwan as the center of semiconductor industry continue to be the case, or are you seeing diversification from there? And is geopolitical tension a factor when you are considering that investment? This is especially relevant for Lam Research because you have a lot of footprint in Taiwan.
Yeah, it's certainly a complicated time to be investing globally, but it's impossible to overstate the importance of Taiwan to the semiconductor ecosystem today. And it's even with the diversification that's occurring right now, Taiwan will continue to be critical to our ecosystem. I think we need to all work towards a future where temperatures drop and we can collaborate on a global scale a bit more comfortably. But in terms of how we invest, we are uh, limited by foreign trade requirements within or export control requirements by the U.S. We pay very close attention to that, but beyond that, if it's fair game based on current regulations, then we will invest globally, and so we don't have any unique restrictions related to Taiwan because of the geopolitical situation, and we certainly want to leverage talent and technology wherever we can find it around the globe.
So I know you see a lot of startups on daily basis. When you look at the startups and after a while you see how they perform, where's the real innovation come from? Is it coming from competitions among themselves, or is it because of collaboration within Silicon Valley and globally as well? Innovation comes from collaboration or from competition? What is your take on that?
I think definitely competition results in creation of some very innovative companies, but collaboration leads to creation of industries, right? If you look at the semiconductor industry, it did not start with just one good chip company, right? It came because the chip companies, the EDA companies, the foundry and the equipment players, the materials player all came together and created that virtuous cycle that led to this whole semiconductor industry, which is, by the way, going to hit over $1 trillion this year. It was supposed to hit in 2030, but we're expecting it to hit $1 trillion this year. Definitely, the VCs are funding competition, like they're funding innovative, competitive companies. But there's a significant amount of co-optation I would see in between these players because not one single company can do everything, even though some claim to do so. But I think just given the nature of the industry, there is very significant collaboration across different parts of the value chain.
Collaboration or competition?
If innovation is king, distribution is King Kong. So, and the only way you can achieve distribution is through collaboration.
I'll sit in the collaboration camp as well, but I can't add too much more to what Anand in particular said there. The industry is too complicated for anyone to do it alone.
Certainly. Thank you. So I think Divya mentioned something cool she saw is the space component part of it. What are some cool things you've seen, Ben, recently as far as technology goes? A cool company that you thought of?
I've been spending a fair bit of time looking at the robotics sector lately, and some of the innovations in physical AI models are very intriguing as we try to move away from having to explicitly program robots to a future where you can give voice commands to direct activities. So still early days in a lot of these companies. I don't think anyone has anything that's really ready for commercialization yet, but it's easy to see disruption coming on that automation front.
Anna, have you seen anything cool lately?
Yeah, a few years ago, we started putting bets around photonics, etc. Now we are starting to see the first light, pardon the pun, around photonics actually making all the way inside the chips in the data center. So the next couple of years, we'll definitely see the whole GPU stack or the whole data center stack with photonics taking a very significant key. I agree with Ben. I think robotics is where we see a lot of action where you're going from a single purpose robot that does welding or Roomba, cleaning up your house, towards a more general purpose robot that can do multiple functions in an unstructured environment. So we're seeing right now we're seeing a lot of robots failing in that thing, but in the next couple of years, we definitely see a wild swing. You're starting to see a lot of this lights out dark factory in Asia that are happening, and a lot of them are just powered by a combination of robots, sensors, and software to make it happen. So that's one area we are seeing very, very bullish on.
You mentioned, do you want to ask something on the space stuff? Have you seen any other things that's very, very cool that excite you?
I mean, I think like space, that's something which I just mentioned. But in addition to in the theme of physical AI and robots here, I think we're in the very early innings of what is called as world models. So there's just like large language models became a thing, and there was an entire ecosystem that developed around it. There is a world model ecosystem that's in the making. It's like what ChatGPT did in 2022. I think early 2022 was when the first ChatGPT 3 came out. So anyway, so we are in that phase of world models and interpretation of the real world, and that has a lot of applications, especially in robotics and more physical systems.
So I know you get approached by a lot of startup founders, and then you hear a lot of all these pitches. But I want to hear from you all. What is the advantage of the CVC or the corporation? Like, it's your term to pitch to the startup founders. What does Applied Venture have that no one else could provide?
A few things. As you see, the deep tech is a very hard to do. So Applied, and we are building up the largest R&D, semiconductor R&D center here, right in Sunnyvale. It's called the Epic Center. We have a lot of collaborations where we're bringing in not only the end customers, but also startups and university academic partners together. It's a $5 billion center that no money can give you access to, but our portfolio companies definitely have the ability to work with some of, not just with Applied, but also with other partners to accelerate this one. If time is money, we can definitely help accelerate through those partnerships.
Incredible. And Hitachi has got an awesome brand name, but what exactly does Hitachi Venture that can provide no one else could?
So the way we think of ourselves is we are the most friendly VC on the table, but at the same time, we do have this added benefit of connecting you with Hitachi. And Hitachi, if you just take a step back and think about the business units, it's a huge conglomerate which has so many different. I think the last I heard, the number was around 250 business units. So you can imagine the scale. But broadly, there are three buckets under which these business units fall. One is the services bucket. So there is a huge services arm, especially catering to, Industry 4.0 type of use cases, competing with Accenture, Cognizant, etc. Then there's the second industrial, so that's where probably most folks know about Hitachi. You've seen your escalator, your TVs, etc. And then the third big business unit is around energy, right? And we try to align our investment themes around this. So in terms of our pitch to startups, of course, we come in at the earlier stages. We invest like any financial VC. But at the same time, we can connect you to the right business units, in terms of getting a partnership going on with Hitachi. And in addition to it, we also serve as your wedge into the Japanese market, which is, the third largest enterprise market out there.
Bolan.
Yeah, I think that our message to founders is that we are looking to be a trusted partner in an industry that requires immense trust in order to have a real commercial impact. And we're interested in helping founders grow and mature their businesses, prove out their products, and leverage the global footprint that we have and the trust that our customers place in us to try to help them expand their commercial opportunities.
So before we get to our last questions and then get to any kind of questions from the audience, I kind of want to ask you is a lot of industries out there being impacted severely with AI. How about your own industry? I mean, you've been in this business for years, and has AI really changed not just the kind of companies you invest to, but physically, is it changing the way you look at companies now?
Well, it certainly is having a huge impact on the semiconductor space. Within Lam, we have a very substantial business unit that's focused on AI, essentially, for products, both for internal use and for sale to our customers. We've published an interesting paper a couple of years ago that looked at how process engineers could leverage AI to accelerate development of new solutions. And we basically showed that AI is great. It can't do everything that a process engineer does, but it can sure save a process engineer a lot of time. And so we're using those tools internally, and it's helping us deliver more value to our customers faster. So when we are looking at companies in this space, and many companies are talking about what they're doing with AI, but we really want to see what problem are you solving, and don't show us an AI tool that looks like it has lots of bells and whistles, but how is it going to be used? How is it going to solve a problem? What is the value of that problem? And that the companies that have that focus on really creating value in our space are fewer and farther between than they probably ought to be. But there are definitely innovators that are trying to solve some of the challenging cost of development and yield challenges and such. We've seen a lot of progress in metrology, for example, where AI is improving metrology today.
Hey, Data, is a robot taking over your job?
I'm pretty sure at least parts of it is, agentified. So I think there are two parts to your question. One is, of course, day to day, as we see companies, how has our investment evaluation framework changed in the day of age, yeah, in the day and age of AI? Certainly, yes. In terms of, I've seen very lean teams accomplish so much in terms of, they're like 5-person teams getting to like easily 10, 15 million revenue, right? So which was unheard of in the past. And most early stage companies are starting to talk about profitability, right? Which was unheard of if you're thinking of building a venture scale business. I think the advice the previous generation of VCs gave was like, don't be profitable, like, just take the capital, right? And in terms of your other question, which is for corporate, what does this mean and how has AI changed the game? Of course, Hitachi has a huge services business, right? And this entire service business model, which was basically based on time and material type of pricing, is completely being shaken to the core, and now it's becoming more and more outcome-based pricing. So there's a lot of internal conversations about not what are the tools that you to use, but how do we fundamentally rethink the business model for services going forward.
So, and then we're going to let you close our panel discussion with the question. And I know it's going to be pretty hard for AI to replace your experience and your perception. How is AI impacting your job?
I think we're all, nobody's irreplaceable. So a few things. My key tenet is that AI is leading to the cost of intelligence is being driven to a zero. So what I mean by that is anybody, anywhere in the world has access to the same set of tools, plus or minus at a very low cost, and they have access to the intelligence and the resources to solve their problems. Right? I just came back from the AI India Impact Summit with a similar point, and there is like an army of people who are, or folks who are, especially the Gen Z, who are completely hooked on to the AI space, and they're not just using it for coding pretty fast, but the entire marketing, the legal aspects, the research aspects, everything is getting disrupted. So definitely from an investment perspective, it is definitely making challenging because there's no longer that moat that software companies used to have. And that's going to redo the entire AI stack. So I think these are very exciting times for AI. I'm pretty bullish. They're going to augment, but it's very impressive how they have gone from hallucination and other issues towards actually delivering on results. And these things are getting compounded at a pace that we have never seen before. So pretty exciting times, both from an investment and also as a user.
Very cool. Thank you for being here. And tonight, we've asked the defining questions of the AI era, and we got insights from corporate VCs in how they navigate in this complex landscape. So corporate capitals doesn't just deploy capital; they actually make real connections for innovations with real industry, with real supply chain to make real global impact. Thank you for being part of Silicon Valley Unplugged. Until next time, we'll see you then. Thank you.
Thank you.
Thank you.